Consumer prices creeped up 0.1% in November. The cost of certain goods and services rose last month, while energy and gas prices saw a decline. So joining me now in Studio 57 is CBS News senior business and tech correspondent Jo Ling Kent. Okay, so we've got these new numbers out. What do they say about how we're spending our money?
Well, it says that inflation is basically holding steady. So what that means is prices actually are not staying the same. They're just increasing at a consistent rate compared to last month.
Right.
Now, what's really important here, of course, is what this means for the Federal Reserve. They start their meeting today, their last meeting of the year. Tomorrow, they're going to be telling us whether or not they're going to hold steady rates or hike them again. But what we did see overall is some encouraging data when it comes to gas prices month to month. They were down 6%. Energy prices overall down 2.3%.
That's good.
Shelter prices, housing prices did increase. They ticked up a little bit, but overall, the economy seems on the inflation front to be holding steady, though not a lot of people necessarily feel that because prices are still going up. They're just going up at a steadier pace.
Right. That's the thing about it, that it's good news on paper because this is what we want, right? We want this soft landing.
Yes.
We don't want like prices to be sort of on this downward spiral roller coaster. But if you're looking at how much you paid for, I don't know, eggs or cheese or whatever last year and comparing it to this year, you're not feeling so good.
Yeah, exactly. And I think it's that consumer sentiment that really matters so much. And we are seeing that improve. University of Michigan's consumer sentiment came out a couple of days ago. And what we saw is actually people are a little bit less worried about the inflation. And when we go into this economic, this election year, of course, people are feeling a little bit more optimistic. But let's compare that to pre-pandemic levels. And we're still really off of those highs. And so we're recovering, we're bouncing back in how we feel about the economy, but we're certainly not back to where we were, say, in 2019.
But investors seem to be thrilled. The S&P 500 finished yesterday at its highest level since March of last year. All three major indexes, or indices, I don't know how you say that, have 6 straight weeks of gains. Investors are loving this environment.
Yeah, the broader S&P 500 is doing well. We've seen a nice, record high for the year. And so what we see is a lot of this data and a lot of this anticipation being priced into the market. And so the expectations are already there. The forecasts tend to be right. There haven't been any big surprises. So my big question is, what will Chairman Powell and the FOMC do tomorrow? And overwhelmingly, Wall Street expects rates to hold steady. So then the question becomes, okay, if you're going to hold steady at the end of the year, when do the rate cuts begin? So many people looking for that relief, especially as we look at the housing market. And so when will the cuts come? Will it be March, April, May of next year? And, the Fed likes to assert its independence ahead of an election. So you can expect to see some kind of action well before the parties formally nominate their candidates.
Interesting. Well, March, April, May, that's springtime. That's when a lot of people start looking for houses. It would be a very welcomed gift if they did that.
Wouldn't that be nice?
Yes. Jo Ling Kent, thank you so much.
Great to see you.